What's good, future millionaires? We back with another banger. I'm DecemberDeMarco, Fortune 500 marketer, here to share my insights of the market with y'all to hopefully help y'all become better informed investors, man. Salute to y'all for pulling up on the channel. Make sure you hit that thumbs up like button for the YouTube algorithm, and do not forget to subscribe and check the links in the description section. For those of y'all that are just getting started in crypto stocks, I got free resources down there for y'all to be able to grow y'all portfolios with some free crypto, some free stocks. You could keep it, sell it, and get whatever else you want that they have available, but just trying to put y'all up on game, man. So also come tap into our private investment community on Facebook, private stock market game. We got over 6,300 active investors in here, and we got over 1,000 people in the waiting room waiting to get in right now. So make sure you come get in before I open this door and close it again. So just doing a quick market update, seeing everything that's going on. First, let's take a look at the prices. We just recently got Bitcoin back over 32,000 for the first time in about 2 weeks. So, congratulations to those that are buying, those that have bought the dip on that one. One thing y'all have to remember is that, most people making the most money right now are traders. During a bear market, people that are holding long term don't make the most money. It is those that are basically buying low, selling high, and really taking those profits off the table. So don't get caught with your pants down. Really, if you get some gains right now during this time off something that you bought, you might want to take a little cherry off the top for yourself to reward yourself for doing your due diligence, for taking that risk, especially with the way the market is looking right now. It's very irrational. So I wanted to come pull up on the charts real quick and take a look at Bitcoin. We got Bitcoin at $31,810 right now. Ethereum at 19. We seen Ethereum break over 2,000 today, as well as Bitcoin going over that $32,000 mark, which is pretty bullish for short term. But I think it's a trap, really, just for them to get more people excited to get a little bit more money on the table before they take it down further in the next few weeks to months. Now, we got Cardano at 62 cents today, up almost 8%. Cardano was earlier it broke back into a number 5 top altcoin, and right now it's sitting back at number 6. We got a XRP up 0.34% today, sitting at 42 cents. Everything else is pretty much down for the most part. We got SHIB sitting at that 12 level, down 4.8% on the day so far. Now, it's not looking like, prices are going to, rally too much higher from here. I still think we have lower levels to see. Maybe not with SHIB, but I believe with Bitcoin, we could possibly see a 25,000 to 23,000 if we don't hold support there, even a $20,000 Bitcoin again. Not saying it will last for long, but I think that the market makers can possibly want to shake the market down as far as possible, basically wreck every single person they can, and also create the opportunity to get in and buy Bitcoin at the lowest points that we've seen in years. So, well, not in years, because we did see in 2020, which I guess that is some years from now. That is about 2 years now. So it has been years now. But I want to look at a couple of these articles, see what's going on, a couple of the fresh updates, so that way y'all can have this news first. So just in, Russia central bank officials say they don't object the use of crypto in international transactions. So Russia is saying that they're bullish on crypto. They don't mind it. We got just in, Soros Fund Management CEO says crypto is here to stay and it's already going mainstream. I definitely agree with that. We got institutional banks buying crypto. We got major Fortune 500 companies using crypto, accepting crypto. You can't just erase that. That's one thing about technology. Once technology develops, we don't, as a species, we don't like to kind of go backwards. So all this use case we developed and got out of crypto, I can't see the world saying, all of a sudden, like, we don't want to use crypto anymore. We don't like it. That's just unlikely to happen. Also, just in, Coinbase says listing an asset on its exchange is free and always has been. So they're just updating people, letting people know that you don't have to pay for the Coinbase listing. It just has to be, a solid project with a solid community. And I believe there's some other requirements as well, like a certain trading value, also a certain amount of holders. So just in, TRX has surpassed 6 billion in total value locked. So we got a couple projects picking back up from those low points that we seen. So if you have some of your favorite projects that you maybe seen or had an eye on during the last bull market that you didn't grab any of, right now may be the perfect time, to do a little due diligence and check those projects out. Now remember, this is not financial advice. I'm not telling you to buy, not telling you to sell, not telling you what to do. Just bring this information to you. Now, also just in, Fidelity has announced plans to offer Ethereum trading and custody services. So we're seeing more and more adoption. Remember, I told y'all the biggest companies in crypto, the biggest adoptions or the biggest developments or disruptions were born during the last bear market, or each bear market. That's when we see companies like Coinbase, OpenSea, things like that change the game for the next bull market be created. So, don't look at this time as like it's just all bad. Oh, so we got an update here, $32,000 Bitcoin. Also just in, Tower Bank, a top 30 banking institution in Panama, declared itself Bitcoin and crypto friendly. So that's more banks assuming, or, basically putting themselves out there saying, hey, we believe in crypto, making it more acceptable to their, making it more aware or available to their clientele. Also is going to create that FOMO effect where eventually we're going to see every single company, not every single, but, the majority, I'll say 90% of businesses in, the space rush to, do some form of crypto adoption. So looking forward to that. Also just in, digital asset firm CoinShares has reported $21.4 million loss from the UST stablecoin crash. We'll be also doing a Terra Luna video. I might even do a live stream on it after this. So Ripple to open office is in India, possibly. Also, BNB Chain has announced a 1-year roadmap outlining decentralization, dApps, and the addition of new features to the network. Just in, DEI, or DAI, I think that's pronounced, stablecoin has dropped below 45 cents. So we see it down 35% right now, which basically dropped it below that dollar mark. Just in, Terra confirms that some users received less Luna than expected from the airdrop and is working on a solution. So here's an article on that about it being unevenly distributed. Also, we seen Discord go down a few hours ago. Just in, Ethereum dev Tim Biko has announced that Robinhood merge will take place around June 8th. Just in, 29 shopping malls, 13 hotels, and 4 mixed-use communities in the UAE are now accepting crypto via Binance Pay. So Binance is making moves in the transactional space. Nice to see. Now I wanted to look at a little bit of what's going on with Biden and the Fed. So this is very important to know. So this is something you really want to listen to. So Biden plots inflation fight with Fed chair as nation worries. Focus on relentless rising prices. President Joe Biden plotted inflation fighting strategy Tuesday with the chairman of the Federal Reserve, with the fate of the economy and his own political prospects increasingly dependent on the actions of the government central bank. Biden hoped to demonstrate to voters that he was attuned to their worries about higher gasoline, groceries, and other prices, while still insisting an independent Fed will act free from political pressure. Like Biden, the Fed wants to slow inflation without knocking the U.S. economy into recession, a highly sensitive mission that is to include increasing benchmark interest rates this summer. The president said he would not attempt to direct that course, as some previous presidents have tried. My plan to address inflation starts with simple propositions. Respect the Fed. Respect the Fed's independence, Biden said. The sit down on a heat-drenched late spring day was Biden's last effort to show his dedication to containing the 8.3% leap in consumer prices over the past year. Rising gas and food costs have angered many Americans heading into the midterm elections, putting Democrats' control over the House and Senate at risk. Biden is running out of options on his own. His past attempts, oil releases from the strategic reserve, improving port operations, and calls to investigate prices gouging have fallen short of satisfactory results. High prices have undermined his efforts to highlight the low 3.6% unemployment rate, leaving a growing sense of pessimism among Americans. Tuesday's meeting was the first since Powell was renominated in November by Biden to lead the central bank, and came 2 weeks after his confirmation for a second term by the Senate. It also represented something of a reversal by Biden as inflation weighs heavily on voters' minds. The president asserted in April 2021 that he was very fastidious about not talking with the independent Fed and wanted to avoid being seen as telling them what they should and shouldn't do. The White House, along with the Fed, initially portrayed the inflation surge as a temporary side effect caused by supply chain issues as the U.S. emerged from the pandemic. Republican lawmakers were fast to criticize Biden's $1.9 trillion corona relief package from last year as pumping too much money into the economy and causing more inflation. That narrative also has held some sway with leading economists who say the financial support was excessive, even though it helped the job market roar back. The administration has walked back in its previous statements. Treasury Secretary Janet Yellen told CNN on Tuesday evening that she did not fully understand the impact that unanticipated large shocks and supply bottlenecks would have on the economy. Look, I think I was wrong then about the path that inflation would take, she said, but we recognize that now the Federal Reserve is taking the steps that it needs to take. It is up to them to decide what to do. Inflation has shown signs of moderating, but is likely to remain far above the Fed's 2% target through the end of this year. Gas prices are expected to keep rising, particularly now that the European Union has agreed to cut off 90% of its oil purchases from Russia. That will force the EU to buy more oil from elsewhere, and it drove oil prices to $115 a barrel Tuesday. This was only the fourth meeting between the president and the Federal Reserve chair, though Powell breakfasts as often as once a week with the Treasury Secretary Janet Yellen, who also attended Tuesday's meeting along with Brian Deese. The White House National Economic Council director, ahead of the meeting, Biden suggested that he and Powell were aligned on addressing inflation. My predecessor deemed the Fed and past presidents have sought to influence its decisions inappropriately during periods of elevated inflation, Biden said in an op post Monday by the Wall Street Journal. He said, I won't do this. I have appointed highly qualified people from both parties to lead that institution. I agree with their assessment that fighting inflation is our top economic challenge right now. In contrast, President Donald Trump repeatedly attacked Powell after the Fed chair oversaw moderate interest rate hikes in 2018 and continued his public criticism even as Powell cut rates in 2019. Biden's endorsement of the Fed policies, a stance echoed by congressional GOP leaders, gives Powell important political cover for a series of sharp interest rate hikes intended to rein in higher prices. Yet the higher rates could cause layoffs, raise the unemployment rate, and even tip the economy into recession. Amid worries that the U.S. economy may repeat the high, persistent inflation of the 1970s, the cooperation between Biden and Powell represents a crucial difference from that time and could make it easier for the Fed to restrain higher prices. In the early 1970s, President Richard Nixon pressured the Fed chair Arthur Burns to lower interest rates to spur the economy before Nixon's 1972 re-election campaign. Nixon's interference is now widely seen as a key contributor to runaway inflation, which remained high until the early 1980s. That's why comparisons to the 1970s are wrong, said Sebastian Mallaby, a senior fellow at Council on Foreign Relations and author of biography of former Chair Alan Greenspan, the man who knew. The president's essay was striking because he explicitly backed the Fed. Biden faces an increasingly global challenge as energy and food costs have jumped after Russian President Vladimir Putin ordered the invasion of Ukraine in February. Simultaneously, China imposed lockdowns tied to coronavirus outbreaks that further strained the supply chains. This has left the EU nursing record inflation and the risk of a recession, while U.S. consumers are increasingly disgruntled by gas prices, averaging a nominal record of 4.62 cents a gallon. Powell has pledged to keep ratcheting up the Fed's key short-term interest rate to cool the economy until inflation is coming down in a clear and convincing way. But those rate hikes have spurred fears that the Fed, in its drive to slow borrowing and spending, may push the economy into recession. That concern has caused sharp drops in stock prices in the past 2 months. Though markets rallied last week, Biden in his op indicated that the record-setting pace of job creation in the aftermath of the pandemic would slow dramatically, suggesting more moderate levels of 150,000 jobs per month from 500,000. That he said would be no warning of weakness, but a sign that we are successfully moving into the next phase of recovery. As this kind of job growth is consistent with a low unemployment rate and healthy economy. So that's that article. Just wanted to give y'all some insight of what's going on with inflation rates, or excuse me, interest rates and inflation, and the battle to fight it, because that definitely determines what happens with the stock market as well as the crypto market. So hopefully this video was informative for y'all. Hit that like button, share this video with somebody else that's in the crypto and stock markets. Appreciate y'all for pulling up, and we are out.